All right, so first couple of minutes, I'm just going to give a bit of an intro so people can still be joining while that's going on. So for those of you that are new to the APMA, we might have some new faces along today. We're the Affiliate and Partner Marketing Association. We're a trade body for the affiliate industry, and we've been around for almost exactly 2 years, so still relatively new to the industry, bringing together agencies, advertisers, publishers, networks, and everyone else involved in the industry to help think about how we can promote best practice, look for ways to improve what we do. And within the APMA, one of the projects that we're working on at the moment is the payments project. So the webinar that we're talking about today builds on that payments project, and you'll hear a little bit more about that as we go along. As I mentioned, we really want to hear everybody's voice. So throughout today, you'll get some polls to fill in. There'll be a chance for you to put your questions to the panelists. And as you can see, we've got a really good mix of people on here. So do feel free to interact in the chat as well. I'm going to start with a really quick sort of 5-minute overview of why we're talking about this today. But you're not just going to hear from me, luckily. There'll be other voices involved in this. So we'll also bring in our panelists, where we'll open up to more of a discussion after the introduction, and then we'll move into a Q&A where you can put your questions to us. I'm Jules. I'm a strategic advisor and board member to the technology and intermediary space. So that's affiliates, SaaS, marketplaces, comparison, those sort of things. My experience has touched on network, agency and advertiser in the past, but primarily I work with publishers. So for example, over the last few years, I've worked with 3 of the top 10 publishers in the UK. And one of the really interesting things about working with lots and lots of different publishers is, from my own experience, I can see payments impacts publisher businesses in a really big way, and also in lots and lots of different ways. And we're going to talk a little bit more around some of that today. I've also spent a little bit of time brand side, network side, agency side, and have seen that this is not an easy problem to solve, but the problems are big. So we're trying to do what we can to make this better. So those problems can include things like frequent and lengthy delays. So it takes a very long time from the moment a transaction happens to the cash actually appearing in a publisher's bank account. Inconsistent payment terms. If anyone has ever worked with multiple networks, seeing the different terminology, the different types of reports that are available, the different processes that get used, that can be an interesting thing to try and untangle. Sometimes it's not entirely clear where responsibility sits. Is it the agency? Is it the advertiser? Is it the network? How are publishers involved? So we'll talk a little bit more about that today. And it can be a really big administrative burden for everyone involved, but particularly for publishers. If you're potentially getting reports from 12 networks and trying to piece them together to match your systems, that can be quite a big job. And how do we know that this is a problem that people care about? So earlier this year, the APMA did a big market-wide study where we asked advertisers a survey and publishers a survey. And that's all, some of the insights from that are going to get released at PI Live. If anyone is there, come along to Kevin's talk. But what we're looking at here is some of the results from the publisher study. And what you can see is over half of publishers that replied to that survey, and we had dozens and dozens and dozens of big publishers responding to this, said payments impact their commercial progress and growth. This is putting significant strain onto their businesses. So what I want to ask is, what does everybody on this call think about this? So Kevin, if I could ask you to press the button and release the polls, you should everybody see a little pop-up saying a new poll has been launched. If you click on that, I would love to hear what you think about this. And when we get into some of our panel discussion, we'll open up the answers for this. And why do we care? Why should we bother fixing this? So this is also from the survey. We asked the question, what would happen if this was better? If everything worked within 30 days, what would you do with that improved cash flow? And over half of the businesses said that they would put it towards investing in growth in various different methods. And this was from every survey respondent, not just those who said it was an issue in the last question. And if you think that the affiliate industry collectively drives £19 billion worth of revenue for UK brands, and half of the publishers are saying we could do more if this was better, that's potentially a really, really big prize. So this is about collectively growing our industry. This is not just an admin task, this is a fundamental growth task. And nearly 1 in 5 companies said they could create more jobs. So this is also about being able to bring people in what's quite a difficult employment market at the moment. We're a place that could create more jobs if we could fix some of these issues. Kevin's just put live another poll for you. Again, we would love to hear what you think about this. So do get in there, fill in the poll for us, and we'll come back to that in some of our panelist discussion. So basically, any improvement that we can make to payment speeds can mean increased revenue for everybody involved, customer growth, reaching out to a bigger audience, and increased company valuations of how investment and funding comes into the affiliate market. And all of that is a big prize for us to be collectively going after. So we're doing some work within the APMA to specifically try and address this. And I want to shout out here a bit of a thank you to Reving, who you'll hear from Rich in a moment on the call. They sponsored our payments guide and this webinar, and they're actually the first company to sponsor content like that on the APMA website and to back us. So a big thank you to Reving. What we've done so far, we released the payments guide back in May. For those of you that haven't seen that yet, that basically takes survey responses from 12 different affiliate networks and puts them side by side to try and actually explain what all the different terminology means, what the differences in processes are, what you can expect when you're working with each different network, and that's been verified by those networks. Elaine has just very helpfully popped a link to it in the chat. So that might be interesting for your account management teams to read, that might be interesting for your finance teams to keep on hand. If you're inducting a new finance manager, here's a big guide you can give that will give them a big head start. So that's intended to actually just show what's going on. We've also conducted 2 roundtables over the summer with about 30 publishers involved. And what we've done there is asked publisher businesses to tell us what their top priority issues are and what they want to do about them. And that's where some of our next steps are coming from. The next step that we're actively working on right now is a payments code of conduct for advertisers. Just to be really clear, the APMA is about promoting best practice. We're not a regulator. So this would be about creating a voluntary scheme for advertisers where we're setting standards that say this is what good looks like. And we're going to be involving agencies, networks, advertisers in the next part of that project very, very soon. We also have further work we want to do throughout 2026. We want to have conversations around innovation and lots more. So there's lots of opportunities to get involved here and think about how we move forwards on this together. Also a bit of a shout out that our next member meeting is tomorrow. You can join the link there. It's going to be in central London in Shoreditch, I want to say, and Clerkenwell. And if you join on the link, you can either join virtually or you can come in person. So you can register for either of those things. Okay, you've heard lots of my voice. So now I'm going to invite the panelists to introduce themselves, and then we'll move to a bit of Q&A. Rich, away.
Thanks, Jules. Very happy to be here. So welcome, everybody, and good to see you all. So yeah, my name is Rich. I'm the Director of Strategy and Partnerships over at Reving. And if you don't know who Reving are, we're a payment acceleration solution built for the affiliate and ad tech industries. Essentially, we capture sales data and allow insight into that data, and therefore the funding to be accelerated to organizations that we work with. And kind of, for me, this is really, really important because I think it's imperative that we discuss payments on a more frequent, ongoing basis. But essentially, through Reving, we've seen the output of what quicker payments, more consistent cash flow can enable. And so that kind of really good story is something that I think should be shouted about more in the industry. And if more publishers and organizations had access to quicker payment, the kind of the growth and stuff that could be experienced as a result. So that's very much why I care, as well as lots of other reasons.
Thank you. Kevin, can I ask that you unpin me now so that I'm not the biggest head? We can share now. David, take it away.
Thanks, Julia. Yeah, happy to be here too. I'm David Ayre. For those of you who don't know me, I'm Chief Information Officer for Intently. We are shopper journey optimization experts, so we sit in a tech publisher space. I personally have been in the industry over 20 years, worked publisher side, advertiser side, agency, network, and so got kind of quite a broad range of experience in terms of payments. For me, this topic's just really important, as Julie mentioned, around investing and cash flow being the king to that, and how we can invest in the industry and innovate and basically make sure that things are smooth and transparent by working together to drive this industry forward. So I'm looking forward to comments and the conversation.
Thank you. Carla.
Hi everyone, my name's Carla Arundel and I'm the Global Sales and Marketing Director at Optimize. And so Optimize are a partnership marketing platform and service provider. We work across multiple territories worldwide, and my role really is to ensure that we are properly engaging with and I suppose addressing the challenges that exist for both brands and publishers, and making sure that we're delivering the kind of the technology and the services that enable them to really optimize and maximize their performance marketing. And so the reason that I'm interested in being involved in this conversation, the reason I think it's important is quite an obvious one, I guess, which is at the end of the day, every business involved in this ecosystem is doing so in order to get paid. You know, that's how businesses work. And I think if we are creating barriers, if we aren't addressing barriers that prevent that from working in the way it should, then we're really doing our industry a disservice. And so, yeah, that's the kind of the angle and approach that I'm taking here. It's like we all benefit from payments working, and so yeah, important that it is, you know, addressed and improved.
Excellent, thank you. Warrick.
Thanks. I'm Warrick Lambert. I'm the CEO for Genie Shopping. Genie Shopping are one of the fastest growing CSS publishers, working with retailers across Europe to drive them sort of incremental sales via shopping campaigns. I guess, yeah, like I guess a lot of them call have kind of been in the industry for a long time, kind of seen things from a number of different angles. But I think the reason I think today's webinar is really interesting is I think as an industry, right, we talk a lot about, you know, innovation, whether that's AI or, you know, kind of the latest trend. And while payments are, you know, not glamorous like that, they're not exciting. They are, I would say, like the biggest bottleneck in affiliate marketing. And I think, especially if we think about our industry running largely on small businesses, right? Most publishers are small businesses. Poor cash flow is like the fastest way to kill a small business. And it's kind of unfortunate that we've built this model where it's kind of baked into the entire process that this is just how things operate. So I think as an industry, and especially as publishers, we need to stop accepting that this is the status quo and kind of push back on this being just the default approach. I think, you know, fundamentally, if we like look at what makes the affiliate ecosystem like strong and kind of innovative, the cornerstone of that is fast and predictable payments. And I think, unfortunately, we're kind of, you know, that's never been something that's really been prioritized. And I think this is a really like healthy conversation to start having now.
Excellent, thank you. Okay, so you've met our panelists. I'm going to take the screen down so you can see our faces a little bit more. So while we're talking today, I want to invite everybody that you can submit questions on anything that the panelists say. We're going to talk for a little while as a panel, and then we're going to open up to the audience Q&A. Kevin, I wonder if you'd like to maybe just ask a example question so that people can click on it to find where the Q&A bit, because that might be the easiest way to know how to submit questions. So let's jump straight in. I touched on a little bit at the start there about some of the issues that can happen with payments, and I think it would be interesting to hear about that from the panelists' perspective. So why don't we start with the publisher and publisher view? David, Warrick. Yes, we can. Kevin, thank you. If you click on that, put your questions through. What kind of issues do you face with payments? Why is this a problem?
Shall I take off you, David, and you can jump in? So I think there's probably a number of different issues that we see. I mean, I think if we take like validations as the starting point of where this kind of this problem kind of persists. I looked at our biggest network this morning and just did a quick check on sort of 2024, and we've still got hundreds of pending transactions from 2024, right? And bearing in mind that we're now sort of 9 months plus into the following year, I think that's real concerning. If we look at like Q1 this year, we've got thousands of pending transactions, and that's fairly consistent, right? And whatever period we look back at, we can find these sales that haven't even been validated yet by retailers. And I think even if we take, the best view possible that all those sales then get validated today, we've still got probably 60 days additional time that we're now going to be waiting to get paid for those, right? Because they've got to get invoiced to the retailer and then paid to the network and paid back out to us. It's just this really elongated process. And I think, unfortunately, it's one of these things that never really seems to get to the top of the list when people talk about like how to run a well set up program. I think that's a big problem. I think the other bit that kind of comes with that is this sort of like real swing in rejection rates. And I think especially for any publishers that are kind of using any kind of paid media to drive the campaigns, that sort of swing in rejection rates that we see, and like we've got a recent example where one of our biggest advertisers went from sort of 40% rejection rate to 80%. That kind of eats massively into our margins, and the fact that this is then so delayed means that we've spent all of that money 3 months earlier, and so we can't adjust our campaigns and optimize effectively. I think that's a real challenge that I guess it's kind of similar to lots of other publishers.
Yeah, I think I totally agree. I think it's not necessarily about cancellations or anything. It's about the transparency around it and about the open and honest conversations that happen or don't happen. For us, the time period from actually tracking a successful sale where the merchant gets paid, the merchants had that money, to us then getting paid and us having to reconcile it's the amount of work that goes into it and the amount of effort that goes into going, where's this money, what's that, across X amount of networks. I know my accountancy team's on the phone and hates the first of every month because it's just an administrative nightmare to understand where things are. We had a great example a few months ago where we actually got paid for, which was great, we got paid for some transactions that happened in 2019. So 6 years later, we actually finally got paid, which is great. It's great that we got paid, but actually, like Warrick said, cash flow is so important to the majority of businesses that work in our industry. And actually, if we're trying to encourage innovation and encourage new players to come into our industry, how can we kind of talk to them and say, look, you run all this activity, but you won't get paid for another 6 years? It's kind of counterintuitive. And I don't think it just sits with publishers either. Yes, Julia said sitting with the publisher hat on, but actually I know networks have frustrations with processes as well. I think at the moment we're just a fragmented industry that if we came together and worked, which we're starting to do with the APMA, we can fix some of this. And I think for me, it's more about transparency and about openness and just having the conversation.
Yeah, I mean, I think that is a really interesting point, David, that the transparency is a really core part of whether the process runs smoothly or not. And I thought it was interesting you saying about, how can we be encouraging new and up and coming publishers to join the industry and choose this as a kind of an industry that they want to invest in and help, develop the future of. But I think the kind of the flip side to that, I suppose, and I think often there is this perception that affiliate marketing is a really easy thing to do, that it's a really easy passive income route. And I just think that's so flawed.
Yeah.
This is an industry that requires a level of skill and experience and expertise to really be successful. And part of that is about being a good business owner. And part of that then is about really understanding what risks exist in the business that you run. And so that kind of brings me to the validation issue, because there's no doubt that for our industry to work on a performance basis, validation is a really key part of what that is. You can't pay out on a performance basis if you're not clear that you've generated performance, i.e. there has been a sale that is a valid one, that means an advertiser's earned or generated or received some income. And so I think it's really difficult to expect potentially that advertisers might all become consistent in terms of what a validation process looks like. I think that's, you know, clearly unrealistic for their businesses to be able to be profitable. But I think it is really important that there's complete clarity about what that validation period is. But more importantly, if there are delays to that validation process, I think this is where often things can fall down and gaps appear in the process, that if for some reason the validations aren't running to the schedule that's published, silence can take over. And I think that's a really poor practice. I think that's where both networks and brands have a responsibility to be open and transparent, to explain if there has been an issue, what is being done to resolve it, and what that means the likely impact is. I know it doesn't solve the problem, but I think it certainly would support partners further in knowing that there is an interest in resolving the issue, rather than it being a bit of a black hole where you're just kind of chasing into a void.
Yeah, I totally agree. And I think you are right. I think to Warwick's point though, where you have publishers where you've been running the program for a year, 2 years, whatever it is, and you're averaging 20-30% cancellation rate, for that to then just suddenly jump to 80% with no warning and no understanding of what it is. I think we work very closely with our advertisers to understand what the cancellation rates are, what are driving them, and we optimize our campaigns accordingly to try and resolve that. And I think in the payments project meetings that we've had, there was an example where someone got 80% of their Q4 commissions rejected, and when it came out in the wash, it was just literally because the advertiser had run out of budget. Which a publisher, when you're investing in that channel, it's you can't plan for that, and you're planning for that cash to come in, and then you get a curveball like that just is kind of, I don't want to say unfair because that sounds a bit churlish, but it makes it very difficult to plan for.
Yeah.
I'm interested to hear about this from your perspective. I guess from the sort of revving perspective, what trends do you see in companies coming to you for payment help? David's touched on some of the elements around cash flow there.
Yeah, exactly. So just to take a step back, kind of what was touched on a minute ago, we actually see that the average length of payment in terms of days is roughly around about 100. That's what we see across all the activity aside from travel, and that is just bonkers that a business is having to wait, you know, over 3 months for a payment. In the UK, the government are doing a consultation at the moment on late payments, and they've recognised that 1.5 million businesses are affected by late payments, and it's impacting the economy to the tune of £11 billion on an annual basis, which obviously that's broader, but it's huge, and we sit within that. Within kind of the partners and customers and organisations that we work with, I've been massively surprised as to the reasons, use cases that are kind of they're utilising revving for. So the obvious and initial reaction is, oh, a business, it's a small business, they're you know, the cash flow is poor, they're tight on cash, but it's actually they're reinvesting into R&D, they're trying to level out their cash flow in the run up to a funding round. There's another partner that it's actually cheaper to utilize revving than their intermarket cash conversion, currency conversion costs, and things like this we didn't even think about. And without kind of revving and or, you know, other avenues, these things couldn't happen. And what I find really frustrating, obviously been in the industry for a long time myself, and I get really frustrated that partners don't necessarily, or wider organizations don't have a platform with which to shout about collectively about payments. We deal with a lot of kind of creators and creator agencies and platforms, and they've got obviously a platform with which to shout about late payments and almost nudge the brands to be a bit more appreciative of the struggles. But unfortunately, within affiliate, we don't have that as a collective voice. So yeah, to answer your question, lots of different use cases, really exciting ones. I think once brands and then agencies and networks can appreciate the good of it, the good of accelerating payments, what it can do, and to help them in return, I think the more appreciation there can be, the better it will be.
Thank you. Yeah, I think it's interesting from the standpoint you have of talking to lots of different companies about how they're seeing this issue. Let's take a look at what people on this call talk. So Kevin, can I ask you to bring up the results from the polls? I showed you in that initial slide that over half of publishers said that payments impact their commercial progress and growth. So I'm interested to see what people think on this webinar. While Kevin is bringing up the poll. And then perhaps it would be interesting to hear from the panelists. What do you think the benefit is here? What would be what would it look like if this was fixed, either for your business specifically or for the industry?
Yeah, I'm happy to take that, because I think we probably went through this process a couple of years ago. So we've been kind of growing quickly for the last couple of years, and in 2023 we kind of partnered with Reving to try and help us accelerate our sort of payment speeds. And not just because there's Richard on the call, but they were instrumental in our rate of growth last year, because it allowed us to invest into new retailers that we wouldn't have been able to kind of onboard, and also into growing our existing partnerships at like a much faster rate. Now, I think since we've done that, we've also now, I guess, kind of gone back and looked at how we can then work with more key partners to kind of accelerate that growth. And I think if we compare the work that we've done with retailers through our AWIN's faster payment pilot and kind of getting deals done directly with some of our bigger partners to kind of increase our payment speeds, those retailers are now on average kind of growing at sort of double the rate of sort of the ones where we don't have those accelerated terms, because increasingly, it's not just an exercise in kind of getting retailers to support partners, right, kind of making our lives easier. It's making sure that we can then invest into those campaigns at a greater rate. And so the retailers where we've got those relationships are the ones where we're looking at kind of coming to them with new campaigns or new innovations, testing new ideas, and they are the ones that we are servicing better from a sort of resource and sort of management point of view. And that is the thing that's then driving that growth. So I think from our point of view, I think we could really point to like the impact that this has, because unlocking that sort of faster payment time just allows us to kind of redeploy that money back into the campaigns. That's what we're doing. And I think to the point that Rich was making earlier, I think anyone that is buying their property, we can't extend our payment terms to 100 days with Google or with the other sources of traffic. We can't extend our payments to our staff by 100 days either. We need to get our money in so we can facilitate the running of the business. And there's really, I think, no excuse for it to kind of still be in this position where it's it's an average of 100 days to take the cash from us driving the sale to then get paid for it.
I think it is an interesting point. We've done quite a lot of work with a lot of our bigger advertisers to look at commercial terms, and just to it's for me it's quite upsetting, is moving away from performance models and trying to just because of cash flow to try and go, actually let's put some fixed fees in, I personally want to invest in the industry, and it's not something when you look at the amount of publishers out there that all publishers can do. It's like Warrick and I are in a strong position where we're able to do that a lot closer, but there's a lot of publishers going into the industry that can't necessarily have that power. That's what worries me.
Yeah, I think that is a really good point as well, because I think we are I guess we're on this call because we are larger publishers, right, and we've got the benefit of having a finance team behind us and FD that kind of works with us on kind of doing this. If you're a small publisher that's entering the industry, right, you don't have access to that resource, and you've still got to kind of tackle all these like big legacy payment problems. It's a real minefield, and David and I sort of in prep for this kind of comparing notes on the tedium of like reconciliation and just the amount of work that goes into trying to check that you have been paid the commission from January last year that you were expecting. it's so hard to do. It takes so much time, and it's so, like, you know, the reporting systems from, you know, networks are kind of really opaque in kind of trying to get to that information in lots of cases.
Yeah.
Sorry, go on, David.
Sorry, Carla. So, like, some of the networks are great, and some of the networks are it's very easy to read it. And then it is just, if you're working across 30 different networks, it's trying to understand what each one means and what the terms are, and it's not very easy often to find that. But for me, also the fact that at any one time, about 20% of our revenue can be sitting in a network either not approved or approved and still waiting for pending. If you map that out across the whole industry, that's 20% of that million, however many millions Julia said earlier. There's just that not paid to anybody that is invested. That is significant money for our industry. They invested in recruitment, in innovation. Like, we would really love to invest more in our tech team, but because of cash flow, we have to kind of be really careful what we're hiring. And that's, for me, that's a massive conversation to the government and everything, to say, look, we could be hiring all of these people, we could be creating jobs for people, innovating our industry, and we're just being held back by this. I'm not blaming any one particular person for this. It's again, for me, it comes back to collaborating, especially some of the bigger partners working together to see what can be done that is acceptable to every partner, not just publishers. I'm not just sitting here with my publisher hat on complaining that I'm not being paid. I understand that we have to get paid for actual real transactions, and how we fix that is kind of key to that.
Carla, did you want to say something there, and then I'll move us on to our
Well, funnily enough, David, you started on the point that I was going to make, which is not all networks are equal, and many networks have made a lot of effort to ensure that there is better transparency, and particularly in that field of being able to reconcile more easily. And I know that Optimise have absolutely done a huge amount of work in making sure that we've got reports that are transactions by payment, so you can pull a single report to see, well, this transaction was paid and it's in this invoice here. And I know that other networks have done similar things, but of course, it's, you know, where that isn't the case, then I think that gives us an opportunity for real improvement, because I think actually in this conversation there are a number of almost separate issues that all amount to the same fundamental problem. So we've talked about the administrational burden of trying to reconcile what's paid and what's not, so you know what you're chasing. We've talked about the fact that there are lengthy validation payments. We've talked about the fact that even when transactions are validated, it's a long time for payment to be received. But all three of those things are somewhat independent of each other, whilst ultimately contributing to the same problem. And I think if we can take I suppose an approach that means we're addressing bite-sized chunks, that's going to get us much further, much more quickly. There isn't a silver bullet in this scenario. And I think part of that is because of the complexities and the layers that exist. If you think about the chain of agencies, or, you know, I don't mean agencies as in performance agencies, but, you know, players that are involved in the end-to-end process, from publisher to network to potentially media agency, and then brand, and then a brand's internal finance team, the potential for something to go wrong at any one of those stages is, you know, relatively high. And so I think, you know, I don't think we can kid ourselves that this is an easy thing to fix. There isn't a single answer, but I think if we can break it down into these, you know, core issues and improve each of those independently, we will be in a better position.
Yeah, indeed.
Can I just say one thing? Sorry, just wanted to jump on that. I think that the key is the going back to, I think, what David said earlier on, is the communication bit. It's kind of knowing what is happening in that chain that Carla just mentioned, and if something isn't happening, what is the knock-on effect? And I think that's really important, that we, you know, everyone in the chain needs to or should understand what the ramifications are for something not happening, or not happening quickly enough. So I think that's kind of important to flag.
Yeah.
I think Carla's right. I think there is networks that have done some great work over the past few years, and it has improved. I think generally as the industry, payment terms are getting longer. I think taking those as best examples and setting a framework out to say this is what everyone needs to adhere to, and some terms in contracts that say there's consequences for not paying on time or something like that. Just coming together again, it just comes back to coming together as the industry and things fix between us.
So I want to bring us on to one final question as the panel, and then we'll move on to the audience Q&A, because I can see that there's questions coming through from everyone. Just to very briefly touch on the polls. Thank you for everyone who took part in our polls. So we asked, to what extent do delayed affiliate payments impact your work day to day? The winning answer was significantly, with it being a big strain on operations or growth. Not a single person on this call said not at all. I assume that's why you all wanted to join this webinar. So great, there we go, validation that this is important. And then we asked, what do you think would be the biggest opportunity if payments were fixed? Almost everybody that answered said investing in growth. So there's our reason for talking about this. Everyone is on the same page here, that this is our opportunity to grow our industry. So I want to put one final question to the panelists as this section of the call. What I'd like to ask is, we talked in those initial slides about the APMA payments project, and that's sort of our industry level developments, the payments guide, the code of conduct. That's our sort of opportunity to come together as an industry to think about that. But what could we do as individual companies or individual players that are involved in these processes? What would be your quick fire tips for things that people can do to help with payment processes?
I mean, it's not a cop out, and it's fairly straightforward, and it shouldn't be taken as patronizing. But I think there is a really important point that every player in the chain needs to know their responsibilities. So, for example, at a partner level, it's about understanding what that particular program sets out as their payment terms and factoring that in, so that you're not faced with a horrible surprise when you realize that actually that brand's validation cycle is 3 times as long as you thought, and that their payment cycle is twice as long. And then equally, from a brand's perspective, it's knowing what you've agreed to and what you're saying, what information you're putting out to partners, and making sure that you're adhering to that. And from a network perspective, ensuring that you also are making sure that both of those things are really clear, and that you are, I suppose, being the voice or the mouthpiece in terms of sharing information when things go wrong. I think that's a really important piece of the puzzle that networks can contribute to, that actually they often don't, and partly because they're busy considering how they're actually going to resolve the issue. But I think fundamentally the lack of communication when things go wrong is as damaging as the thing going wrong in the first place.
Thank you.
Yeah, I think the transparency in the communication is absolutely key. I think I would push back slightly on that kind of everyone needs to be aligned, because I think a lot of the kind of those challenges, right? We have to make these decisions about kind of the impact of payments all the time. I think a lot of the problems kind of, again, without pointing too many fingers, is kind of, brands not really sort of treating payments as, as admin, but kind of thinking it as more like part of their affiliate strategy, right? If you accept, I think we can point to the examples of where you accelerate faster payments, we can reinvest, and I think, the poll kind of backs that up. And I guess from a sort of a network point of view, I think there is still that slight like power dynamic where our relationship oftentimes isn't with the brand directly, right? It's with the network. And so our ability to kind of push for those payments and kind of make that happen is limited by the fact that we're not contracted with those partners. And so it is really like reliant on the networks to be the advocate for kind of getting these payments processed faster. And I appreciate that that's in the network's benefit as well. But I think, from a publisher point of view, I think that the pain that we feel is kind of greater in kind of that process when payments are delayed. And I think that's the bit that we really need networks to kind of champion much more heavily with the brands that they're talking to, right? When they're doing the QBRs and they're talking about how to grow the program, is kind of putting payments sort of front and center in that approach, because that allows us all to reinvest more heavily back into the channel.
Yeah, and I understand that there is the perception that potentially for networks it's less of an issue than it might be for partners. But I think fundamentally, you know, as you said, Warwick, at the end of the day, if a brand hasn't made a payment, neither network nor publisher is benefiting from the work they've delivered. And so I think it certainly, in my experience, there's no question that a network has exactly the same risk and challenges associated with late payment and delayed payment. And so I mean, I don't agree that there is a kind of a power dynamic in that it's easy for a network to not worry about payments. It's really high on our agenda, and you know, simply because we are businesses. I think from my experience, when those things are going, because I think it is really important to make that distinction. You know, validations are one thing, and that's a kind of a separate issue. I think specifically if we're talking about validations having been made but payments being delayed, that's the bit where I think we, you know, that's the kind of the pointy end of this, where, okay, clearly, you know, work between brands, network and partners needs to be it needs to be somewhat different for us to be able to move forward in that respect. But yeah, I think it's just as much an issue for networks as it is for partners, even if it's perceived differently.
And also on that, there's an onus on the publishers and partners to explain what the resulting late payment means for them as a business as well, to the networks, to help arm the networks, have that conversation with the brand and really get it across to them why this is a serious issue or challenge. You know, some partners, as Warwick said earlier on, they're small, medium businesses, and they're quite often they might be relying on this particular payment for business operations, headcount, etc., and maybe sometimes they could do, a partner could be a lot more a bit louder in terms of explaining what the issue is and what the challenge is to them, just to help the networks. Because I've worked at networks, and you're stuck in the middle, and it is tricky. But if you're given that little bit of just ammunition to explain, you know, what a quicker payment or an on time payment could do, then I think that'd be really helpful.
Absolutely. David, do you have anything you want to add to the mix? What would be your quick fire tips for what people can do?
I think very similar to what's been said. I think there's definitely onus on publishers. This is not just about me sitting here going, networks have to do everything, brands are horrible, blah blah blah. There is a notice. I'm not that nasty. There is an onus on publishers to understand the terms, and when they're entering into something, they are aware of the payment terms and they know what's happening. And then back on Carla's points, there's then an onus on the brand and the network if something goes wrong, to be open about that and to communicate it. Things go wrong in life. It is what it is. I love the guys at Revving. I think I love what you do, but the very fact that you exist as a business, the very fact that you're needed in the industry, does show that there's a need for publishers to get paid, and there's something not happening up a funnel. So yes, I think everybody getting involved in the payments workshops with the APMA would be a good start.
For sure. I've got one more quick question on this bit. We haven't touched so much on agencies, and I noticed when everyone was sharing their role in their company earlier on that we have got quite a lot of agency representatives on the call, which is great. We appreciate you joining in with this. Has anyone got a quick fire tip for if you're a member of staff at an agency? What can you do?
I think, having been agency myself, you're representing the brand, so it's exactly the same conversation as you have as the brand, is being transparent, being open, having conversations with your publishers to make sure they're aware if there's issues. It's just a very similar conversation, and working with your finance teams to try and improve payments processes maybe as well. I think I've experienced some very interesting payment processes where POs are needed and then the wrong PO and all this sort of stuff, and it just gets very complicated. Could be resolved a little bit quicker, I think.
Yeah, it's tough, definitely. Let's move to our audience Q&A. Thank you everyone that's been submitting questions while we've been talking. If you want to find this, there's some little dots down in the bottom right hand corner of your screen. If you click on the section that says Q&A, you can add questions and you can also upvote other people's questions. So I'm going to start with the one that currently has the most upvotes, and it's a bit of a controversial one, so I'm interested to see what everybody makes of this. Thank you, Simon, for your question. How about retailers pay interest on delayed or not approved transactions after X amount of time? Why don't we charge interest on payments that aren't made?
Yes,
Well,
agreed. As a publisher, yes, definitely.
Well, yeah, I mean, and this is the thing, I know, I mean, clearly I haven't had sight of every network's terms, but certainly within our advertiser terms, we do have clauses that will stipulate there are financial penalties for late payments. But I think the thing that doesn't address is extensive validation. So I think, sure, if we're talking about validations and payments being delayed, yes, we are doing that. But I think probably the bit that's missing is the preamble to that, which is that preceding, okay, well, why is a validation delayed, or why is validation so extensive when it may not need to be? And so again, I mean, I know I've said it a few times and it's becoming a bit boring even for me, but it's that thing of separating these issues. But yeah, absolutely. I imagine that most networks will already have some kind of clause that stipulates some financial penalties if a brand breaches their payment terms.
Mm-hmm.
That's very interesting. But who gets the penalty though? Do you share that penalty among your publishers that have?
I mean, it's rare that it actually comes to fruition. Yeah. It's largely okay, but you are aware, client X, that this is the case. Like, okay, well, you know, it tends to be more of a stick rather than a reality. It's a good deterrent from delays being more extensive than they could be.
But maybe is the suggestion that they aren't enforced strong enough, and therefore brands feel they can get away with not worrying about it as much as they could?
I don't think so. I think from my experience, when you look at the reasons kind of payments are delayed on validated transactions, it's often because there is a genuine issue. Let me try and describe what I mean by that. So let's say there is a scenario where you've got network, media agency and brand, and there's been some issue with a PO number, but that PO relates to more than just the affiliate channel. So in order to resolve that, it requires lots of parties to be able to sign off and backtrack to recreate a PO number and then start the process again. So things like that are less about penalizing a brand, but more about saying, okay, look, we see there's been this issue, we want to change the process going forward so that this doesn't occur again. Let's look at how we resolve it, and in the meantime, if we're not able to get this payment expedited, you're going to have an impact, which is going to be affiliates choose other programs to promote, or they reduce how heavily they're promoting you currently. You will feel that financial burden. So I don't think it's a fear of enforcing it, but I think it is about considering what the real issue is, rather than kind of a blanket, oh, well, it's, you know, it's not on time and therefore there's a penalty. Because of course, as a network, you are working in partnership with both brand, agency and partner. So it's about taking a constructive approach rather than just penalising, I think, in order to get the best results going forward.
Let's think about the other angle around this, because I think we've been talking about some of the scenarios that have been difficult. And if I can, Warrick, I'd like to go to you with this one first. How about thinking about the things when things work well? So we have a question in the Q&A. Do you have examples of a brand or a network dealing with these challenges that you would say is best in class and could be potentially replicated by others? And it's okay if you don't want to name the brand.
Yeah, I think we do, but I think largely it's where we're working more directly with the brands rather than through the networks, because I guess for the reasons that the Carl's kind of outlined, trying to do things kind of en masse right across, like, you know, hundreds of retailers becomes very challenging. And so I think what we've found is to kind of get better payment terms, or to kind of get a relationship that kind of is kind of better aligned with kind of our goals. It has been where we've gone direct to the brand and kind of explained those challenges, and then kind of built like a bespoke solution, which I guess is kind of difficult for one in that, it's hard for all publishers to kind of then have access to those same tools, right? And two, for us, it's difficult because then we then have to extend that across, 1,000 retailers that we're working with at any one time. I think something like Ayre have got like, a faster payment pilot that we've kind of done some work with that has allowed us with some of their retailers to get accelerated payment terms. And that's largely down to trying to remove sort of the validation delay. So we kind of essentially work on like 100% acceptance for sort of a handful of programs that then mean that they're invoiced quicker and we get paid quicker. Now that's great, but again, that's it's not a standard setup, so it does require us kind of going back and kind of getting those individual conversations. And I think it's worth kind of highlighting that they are very much like an outlier as a network that's kind of doing that, or certainly that we're working with a network doing that at the moment. So I think it's definitely possible, and I think we, like I said before, we can really we've got some great case studies about the growth that unlocks, but it is kind of quite one-to-one as an approach, because I think to Simon's point in the question, right, there isn't an Ayre conversion protection initiative anywhere else to kind of tackle this as a problem, and I think it really needs to come from the networks to kind of drive this forward, because like I say, for us it's it's very difficult to kind of do that across whatever 13 network partners.
Yeah, well, I think because Optimise equally have a express pay and faster pay solution, where effectively, if we have a long-standing relationship with a brand where we can have some sort of assessment and analysis on their typical validation rates, we're able to authorise prepayments on behalf of partners where we're confident that their conversion rates are of good enough quality. So assuming thresholds are met, again, supporting partners and brands ultimately and making sure that those payments are moving more quickly is a really high priority for us. And so that's been something that's been really effective, and especially in markets outside of the UK where there are more complications, shall we just say. But yeah, I think there's definitely room for improvement where networks can consider some of that, almost factoring some of that prepayment where there is confidence around a kind of a brand's validation rate and a partner's quality of traffic, because ultimately I think what we've seen is uptake from partners and brands that have been involved in that faster pay and express pay program has ultimately benefited both. Going back to the previous examples of growth, partners have invested more and been able to perform better and more consistently, and brands are benefiting from that in the long run. So yeah, I can see that could be a more potentially a solution that more networks or platforms could consider.
Mm-hmm.
I think outside of technology, we've got quite a few, without naming individuals, we've got quite a few cases of where we've worked either with the network contact or with the agency contact, and things have improved. And it might be actually that it's something just to do with processes at the advertiser side that stopped something, and it broke down at the advertiser side. And by working with the network, we've been able to kind of facilitate that through, and that's definitely improved things. I think technology is definitely needed, and improvements in tech and how we do that is needed, but it does still come down to the personal touch, and how scalable that is questionable. But it's about having the relationship and account managers in networks being able to confidently have that conversation around payments. I think sometimes it can be, if it's a junior person at a network, it's quite a sensitive subject, talking about payments, and just having that kind of ability to, or as a publisher, being able to support them with those conversations as well. And we find it really beneficial to work with the networks to get these issues resolved.
Absolutely. I'm going to go to one last question, and thank you to everyone that's been submitting through the Q&A. And Rich, I'm going to go to you first with this one. We've had a question from Rachel. Are there examples of publishers removing or stopping driving traffic to brands because of delayed payments? It feels like brands have a bit of power here. Do we rarely over push for fear of losing that brand? The same could apply to an agency taking a hard stance, or a network. What do you think about the power dynamics in the industry and how this impacts this?
That's a hell of a question. Yeah, I think I know it's kind of contradictory to what was said earlier on, but I think there are kind of power dynamics in terms of what you can can't. And if you're a larger publisher with big volumes, you're obviously going to have a bigger sway with the network and also the advertisers, which is a shame. And because more often than not, it's the smaller publishers that are in more of an urgent need for said payments, perhaps. I think it then goes back to what I was saying earlier on. We've got to help each other and arm each other to explain what is going on in the situation. Publishers need to really stress their situation, what is going on, what the results of the late payments are. Networks need to understand there's two sides of the story, and really be able to fight for the publishers to the advertisers. But also, I think that there's an onus on the advertisers to understand perhaps affiliate a bit more in general and understand the flows, be able to explain to the network, hey, this is why there are the delays that, like Carla mentioned earlier on, and ensure that that's being passed down to the publisher as well. So I think it's like an up and down line of power dynamics in various different ways, that I think we could, every step of the way, and definitely not just networks, definitely not just brands, but every step of the way, it could be improved, and we can all be accountable for that. I've worked agency side, network side, and there's a question about agents earlier on. Quite often within a media agency, affiliate is it's 1, 2, 3, if you're lucky, people in the corner of the agency, where the rest of the agency, because it's not big, bold, and sexy, doesn't get the coverage or appreciation. So yeah, I think we can all do better in that power dynamic to make it more level.
Absolutely. All be more big, bold, and sexy, right?
Yes.
All right. Thank you so much, everyone. We're coming up to our last couple of minutes now, so I'm going to ask our panelists just to give us their closing thoughts, and I'm going to ask you to answer this one in 1 to 2 sentences each. So your sort of quick fire thoughts on this. What's one thing the audience could take away ahead of peak to help publishers with their current payment processes?
I would say get closer to contacts that can support you. So whether that's a contact at an agency, the network, ideally someone in the finance team if you can, but start to build those relationships so that you get a bit more insight and understanding, support when things aren't going the way that you want them to.
I would say finance is your friend. We're not that boring, really, honestly. We can even be fun sometimes. I think, yeah, just like Carla says, yeah, talk to each other, be transparent, get involved in the APMA is my big push. Yeah, 100%. Just talk to each other more, especially through peak. If there's going to be challenges, speak to each other. It's like, I think Rachel's question was really interesting. We're not we don't generally slow down stuff, but there's so much more we could do if we work more together with each other.
Absolutely. Richard, Warrick, sentences.
I was literally just going to say, share plans. This is arguably the most busiest time of the year, and moving into next year when there's going to be lots of financial planning for the year ahead. It's share plans, share what everyone is doing and what they can do with, better payment terms, etc., and so everyone's got a greater appreciation of everyone's role in the pipe.
Yeah, definitely. I would say from a publisher point of view, like I think to Richard's point, now's the time of year where retailers are the hungriest for sales, so now's the time to kind of leverage that that power that you've got to kind of drive traffic, right? So I would say audit your commissions, make sure you have an idea about what payment terms are, what rejection rates are, and then use that when you're negotiating the rates for peak. Don't just look at a top line CPA rate or a tenancy, right? You need to understand when you're going to get that money and kind of how much of that money you're actually going to expect. So I think, yeah, that would be the main thing from my point of view. I guess the other thing as well is, for everyone on this call to collaborate with the APMA around this payments project, right? I think, we're trying to pull lots of publishers at the minute, but kind of the aim is to kind of expand that out and to, involve all parties. But I think, this is all much easier if we're all kind of aligned and we're kind of, working together. So I think, yeah, supporting the APMA through this is really important.
Thank you. So hopefully some practical tips for everyone to take away there. I know everyone probably is doing a million bits of planning for peak at the moment, so there's some thoughts to be factoring in. We've mentioned there a couple of times around the APMA and getting involved with that. We're going to send out a bit of a reminder with some of those links after this today, but just to sort of give you the directions on where to go. If you join the APMA newsletter, which you can do on their homepage, that's a great way of seeing where we're up to with these projects and when there's events going on. You can also join our members meetings as a guest. There's one tomorrow, there's one every 3 months, so you'd be welcome to join that either in person or online. And then watch out for those sort of continued updates throughout this year about the payments project and the code of conduct. And we welcome ideas for that code of conduct as well. You're welcome to reach out to us and share that. So thank you so much, everyone, and good luck with peak payment processes. Thank you very much for joining, everyone.